This is the feature address for the 44th Annual General Meeting of the Elks City of Castries Cooperative Credit Union Limited at the Financial Administrative Center, Pointe, Seraphine, on Saturday, 13th August 2022, commencing at 2 p.m. My name is Thecla Deterville. Mr. Lennox Mondesi, President of the Elks City of Castries Cooperative Credit Union Limited, other board members and shareholders of the credit union, management and staff, league representatives, and representatives from other credit unions, invited guests, members of the media, ladies and gentlemen, a pleasant good afternoon to you. The theme for this year's annual general meeting is Navigating the Future, a Spectrum of Opportunity. Within that theme, the sub-theme of my address is Savings and Financial Well-Being. I consider it an honor to be invited to address you at this year's 44th Annual General Meeting. My intention for today's presentation is to use a very practical approach, nothing esoteric, but highlighting some of the things we all know intuitively, and yet when we get caught up in day-to-day living, it takes flight, we lose focus and forget about them. But we need to be reminded that it is often difficult to regain opportunities once lost. It is imperative that we grasp and create opportunities that present themselves to enable us to navigate a future shrouded in uncertainty. Your membership in this credit union provides you with that opportunity. We often hear it said that plans of men and mice often go awry. Yet it is better to plan and things happen over which you have no control than not to plan. At least we can learn lessons if we did not succeed. The good news is that we can each play our part wherever we are in life as we attempt to cushion the impact of this uncertainty that we face. When it comes to savings, it is a discipline we must all adopt. Sometimes we find ourselves saving for a particular purpose. Example, a deposit on a piece of land or a house, appliances, or education or that of our children. These may be short or medium-term savings goals, but we must not lose sight of our long-term goals. Long-term goals that are particularly geared towards our retirement. I refer to the practice of savings where time is a factor and compound interest multiplies. For this to materialize, it cannot be savings where we dip into, whenever we please at our whims and fancies. It has to be long-term savings that can sit somewhere where it can earn interest, where interest meets principal and gets added on, and interest is earned on the total, and it continues and continues. And can you imagine how this could, multiply over our work life? If any of us who have worked for, say, 20 to 25 years or so were to consider how much money has passed through our hands during that time compared to what portion we have saved or invested, we will certainly be questioning ourselves. My hope, or I trust, that the younger ones among us learn from our mistakes. While attempting to build our nest egg for the future, we need to be aware of some of the financial pitfalls. Whereas in today's world, it is convenient to own or use a credit card, we must also be aware of the rate of interest on these, which is sometimes in the region of 18 to 22%, if not higher. This is where utilizing the benefits of your membership in the credit union can pay dividends. Paying only the minimum on your credit card monthly is courting disaster. Or using one credit card to pay another takes poor debt management to another level. If you find yourself in that or similar situation, this presents again an opportunity for you to approach your credit union with the view to debt consolidation. We must literally develop a ritual or habit around savings. As I say this, I recall a story given to me by my deceased mother-in-law, who was first a shop attendant, then a speculator shipping and selling mangoes in Barbados, and in her later years, she sold her wares under the CDC Hader market. She recounts when she worked at Balbo Edwards as the shop attendant, the pay was small, a few shillings a week. She was a single mother with one child. She bought the milk and other necessities, but she had to save some of that money every week, regardless of how tough things were, even if it meant that she cried from one payday to the next. Needless to say, that lady acquired wealth. She was not born with a golden spoon in her mouth. Her mother died while she was young. She had to take care of her siblings, and her father remarried. She did not spend a bad thing. She worked hard, was frugal in her spending, but most of all, she saved a portion of whatever she earned and invested well. I remember her saying to my deceased husband, "You studied economics, but I am the economist in the family." As I say this, some of us may think, oh, in these modern days, who have time for that? But at the end of the day, it boils down to the decisions and the choices we make on a daily basis. Our priorities and what we base these on. I am of the view that as a people, we do not pay sufficient attention to retirement planning. From my experience, from what I've seen and what I've heard, I think we should begin planning for retirement as soon as we begin to work. The same way we begin to contribute to NIC, let us begin to put aside something for our retirement. As a former banker, I remember the days when the retirees from London with their pensions would retire with maybe £500, £800 per month. In these days, the exchange rate on the pound was over $5, and the rate of interest on savings would be somewhere in the region of 6 to 7%, and on fixed deposits in the region of maybe 10 to 12%, or sometimes even more. Those persons were able to literally live on their interest. These days are long gone. If anybody offers you that rate, first thing you will say is this is too good to be true, and usually it is. Case in point, the Clico fiasco, where people are still waiting for their retirement money with no apparent end in sight. There's some things that we have no control over, even when we have taken the right decision. What we have to realize is that our lifestyles are based on our salaries and any supplemental income that we earn, possibly from a side hustle or an investment. Consider at retirement, unless you have a very healthy retirement plan or a profitable business, or you have invested very well during your most productive years, there will be challenges. Some of us make the assumption that when we retire, our expenses will drop. That is not necessarily the case. At retirement, your home and car may be fully paid for, your children may have all been educated, and if they are so inclined, they may or may not be paying their student loan, which puts your family home at risk. Added to that, the car costs a lot to maintain, clothes become dated, the appliances go bump, the shoes begin to dry rot. COVID showed us what that can look like. The plumbing needs to be replaced. The wiring of the house is defective. The kitchen cupboards are falling apart. The roof is leaking. The house needs a coat of paint, and you get the picture. At today's prices, putting these right can be of a tall order. I recently attempted to replace a refrigerator and was told that it would cost me $8,000. Where is the additional money coming from? What this says to us is that we need to develop the habit and practice of saving a portion of our income, regardless of what our level of income is. If your credit union facilitates small deposits and the employees do not embarrass members making small deposits, begin the habit. Don't wait for the lump sum, which sometimes never comes. And sometimes we say, I will begin to save when I get more money. And it doesn't happen. 1 plus 1 still equals 2. When we look at savings, we must also look at the cost of borrowing money. And that's where you as credit union members and shareholders have an advantage. If you use the services wisely, You can cause your membership of the credit union to work to your benefit. I'm sure there are long-standing members here who can attest to that fact. The judicious use of the services of the credit union has allowed them to accumulate wealth, have a decent standard of living, own a home, educate their children, while increasing their investment portfolio through their permanent and ordinary shares. I encourage you as members and shareholders to find out as much as you can about how the credit union can assist you, particularly in these challenging times. Invest in the permanent shares of your credit union, as these give you the opportunity to earn dividends, and is also beneficial to the financial stability of your credit union. Help your credit union to work for you and on your behalf. Some of us may be fortunate to have contributed to NIC and or our employer's pension plan. Yes, NIC may be consistent now, but we don't know for how long. The maximum of the NIC pension is insufficient to sustain anyone who contributes at that level. Our employer may pay us a lump sum on retirement. What do we do with it? Some people use that to pay off their mortgages and other debts. Others may opt for a monthly payment, a decision that must be weighed carefully. Do I opt for a lump sum, or do I take a monthly payment, or a combination of the two? These are some of the questions we need to ask ourselves. In some instances, the insurance companies that manage the pension plan may have gone under. I'm not saying these things to scare you, but to make you aware of what the possibilities are. All we need to add to this list is a major medical, and with or without insurance, it becomes problematic and can make paupers out of persons who may have been accustomed to a better standard of living. I've heard of people with medical coverage of 1 million, and the benefits under the policy was exhausted because of their medical condition, and they had to seek other sources of funding to complete their medical treatment. You understand how major medical can literally wipe us out. This highlights the value of combining investments with your saving practices, however you can. A diverse investment portfolio is advisable, whether it be a viable small business with adequate and appropriate succession planning, meaning that there's somebody reliable if you are unable to work, who can work and give you a monthly income, be it real estate. I've noticed that you have an offer, own a piece of in your annual report. It says own a piece of St. Lucia, and the deposit is reasonable. The rate of interest is also reasonable. You may decide to invest on the stock market, either internationally or regionally, to the East Caribbean Securities Exchange, to its brokers in St. Lucia. You can purchase government bonds, treasury bills. You can work the money market. There's cryptocurrency. This is fairly new. In current times, the value has dropped, and some people are buying because the value is low. Those who can afford, with the intention of leaving it there, so that it maybe when it picks up, and others are just sitting on what they have, so that to see if things will change, in the not too distant future. But again, if we need to recognize our risk profile. We need to understand our risk profile before we decide what types of investments we will get involved in. So ask yourself, whether you can afford to lose, X amount of dollars. Some of us are high risk takers, some are medium, some are low. Those of us who are low risk takers may want to stick with the regular savings, purchasing land, opening fixed deposits, which pays little interest, or purchasing government bonds and treasury bills with different timelines, some short, some medium, some long term, but these carry reasonable interest rates. Some financial institutions also offer retirement plans where you can make monthly contributions within your means, and that's also a good, a safe way to go. As somebody who's a low risk taker can certainly do that. Be absolutely clear on what your risk profile is when you are considering investments. Ensure that you are well informed about the types of investments you are going into. Ask questions of the experts, the financial advisors, the financial institutions. If you do not understand, probe, keep asking questions. Do not be ashamed. if you don't understand, in the first go. It is your future. A little embarrassment will not kill. Check, also speak to your credit union advisors. They too might be able to point you in the right direction. Those of us who believe in generational wealth may go the route of insurances, sometimes with the savings company. Too few of us understand the type of policies we have. Because in the old days, we did not get much information from insurance salesmen. That is one of the reasons why some people are so suspicious of insurance. But let me tell you, it serves a purpose. Be it house insurance, vehicle insurance, content insurance, travel insurance, health insurance, life insurance, term insurance, disability insurance. Think of what the result can be if something happens. If nothing happens, we're okay. But if something happens, what is the impact of not being insured? I know of some people who decided that they will not waste their money on insurance, and the inevitable happened, and their loved ones were left to suffer. Do your research on the companies. Ensure that you understand the type of policy you have and what the benefits are to you and your heirs. Sometimes people have a health insurance and believe it is a life insurance. Ask questions if you are not you're not sure. If you're not sure on what you don't quite understand, even if it means you have to get a second or a third opinion, do so. And this is your investment in the future of your family. You have a right to get all the details associated with that policy. A word of caution here. Please ensure that you know who the beneficiary on your policy is. Sometimes we buy policies when we are young and our lives and significant others change, only to find out that the person who will inherit the proceeds of the policy is not really who we intended, it to go to. So again, it's something you need to clarify. And so as a credit union, this presents an opportunity to invest in educational forums to assist members in understanding these issues and that can have far-reaching implications and impact on their financial health. With advancement in technology, people who are tech savvy know many more, they have many more options of generating wealth using the technology. Even social media can be monetized if you know what to do. Sales versus via the internet. The technology also allows for passive income, which means while people are sleeping, their investments will be increasing if they, play the stock markets. They can generate sales from all over the world. While at any time they don't necessarily have to be working to do that. So that's one of the benefits of the technology. Again, for people who know how to use it. If you're going to that route, just make sure you understand the technology, you understand the process, you understand the various platforms that are being used, and you really know what it is you're doing. On the flip side, there are lots of get-rich-quick schemes that if we're not careful, that could really end up putting us in some serious trouble. And we need to pay attention to these. The technology has its benefits, it also has the disadvantages. And so we have to be vigilant and not allow scammers to deprive us of our hard-earned money. After traveling at the height of the COVID pandemic, I am of the view that every family must ensure that there's a family member who is tech savvy, who knows technology, who understands technology, who can use technology. This is the future. It is already here. Without it, we can be left behind on so many fronts. I read in your annual report that moving forward, your credit union has adopted the use of technology with the mobile app, and there's more to come. Whereas this is commendable, we cannot lose sight of the fact that your membership is diverse, and there will be members who would have an aversion to the use of technology. How do you facilitate them? How do you educate them? How do you hold their hands to ensure that they are not disadvantaged? How can we level the playing field so that they have equal opportunity as members to reap the benefits of their membership? No one should be left behind. For those of us who may not have paid attention to the pitfalls occasioned by spending every cent we earn with no regard for the future, it is not too late to course correct. The saying, better late than never, applies. It is my hope that what I have shared with you today serves as an eye-opener, and that in keeping with your theme for this and you're generating, you look for the opportunities that are before you. Do not second guess yourself. Grasp the opportunities. Make sound decisions regarding your savings and spending habits and patterns. As a family, decide what is necessary and what is not. Identify your priorities and work on them. Do not be distracted. Stay the course. We are all aware that the cost of food and everything else is skyrocketing. What are we doing to minimize the impact? Grow what you eat is a good mantra to uphold. In addition to sound investments, we need to look at cost cutting measures to allow us more opportunities to continue to save. We hear so much about inflation and recession. It does not mean that we must stop spending altogether. It means that we must be wise in our spending habits. I noticed that there has been minimal uptake for business loans in your financials, yet the vehicle portfolio looks healthy. Does that speak to our ability to differentiate between needs and wants? What are we spending on? Is it absolutely necessary? Is it adding value? If so, how? Does its value appreciate or depreciate? What other options can we consider? While we are at it, uh, while we are at it, we should educate our children on the value of savings and investing to ensure a better future for themselves. I understand that they can become members in their own right at 16. But in the meantime, teach them savings habits. Open accounts for them. Let them start a piggy bank where they can, begin to accumulate money with the intention of banking it, later, eventually. Take insurance with reputable companies that can be cashed in when they're ready for higher education. When the time comes, it may not cover everything because again, by that time, everything has escalated. But at least you have something to begin with, a start. You'd have a deposit on something. So that's always a good way to start. Because scholarships may not be that widely available as they are. That can be depleted, that can diminish. So having a cooperative in schools was also a good practice. And I can tell you that those who saved then are still saving now. And those who didn't save are still not saving. So let us develop the savings habit, a sure way of generating wealth. Let us be purposeful in planning for our future. Your credit union is there to assist you in that process. Make your membership count and make it work for you. Ladies and gentlemen, I thank you.